Good morning and welcome to another East Capital webinar. For those of you dialing in for the first time, my name is Massimo Grassotti and I am part of the Investor Relations team. Today we are joined by East Capital's Senior Consultant Emre Akcakmak. At East Capital, we pride ourselves on being on the ground and local in the markets where we invest. If you've dialed into our other events over the last couple of weeks, you've heard us we've spoken to Hao Zhang, based in China. We've had Sana Sachar call in from Vietnam, and today we have Emre in Dubai. Now, over the next 15 to 20 minutes, we'll be asking Emre a series of questions to find out about a large global EM and frontier market conference that he's attended and what we can expect from these markets moving forward. Please note that you have the possibility to ask Emre questions throughout the event using the question and answer function up in the right corner. So without further ado, and with that being said, let's dive right in. Emre, thank you very much for taking the time to join us today. So if we dive right in, please start with telling us a little bit about this conference that you've attended, who you've met, what's been going on.
Hi, Massimo. So this conference, it's not only about this conference, actually. Over the past 4 weeks, I, together with a colleague, a senior analyst from East Capital, we attended 3 different conferences. One was in Dubai, the first of it, the whole week. This was MINAT, so this was Middle Eastern plus Turkish companies. Then it was the Vietnamese conference. We were together there, meeting with 20 companies probably. And this time around, this was a conference, very large investor conference with 700 investors globally. These are mostly Middle Eastern and frontier markets investors. And we had around 200 companies attending. So it was one of the biggest frontier and small emerging markets conference in Dubai, week-long meeting with companies and policymakers. So we have a lot of fresh observations and ideas in mind.
Great to hear. Now, there have been some signs of optimism early this year, right? But markets are still going through quite a volatile time. What's the situation in global frontier markets, smaller emerging markets? What are the major trends and the most interesting developments that we've seen in this universe so far?
So let's call them frontier and small emerging markets together, however you name it. When I refer to them as frontier markets, please take this as inclusive of smaller emerging markets, because here the idea is to have a look, closer look at the bottom part of the emerging markets. As you know, it's a very concentrated index with China, Taiwan, and South Korea accounting for 2/3 of the index. So usually issues are different. You have the major trends. Yes, there was a bit of optimism in the beginning of the year. This was driven by the US and China reopening. But frontier markets have their own different cycles. So I think they are affected primarily from the US dollar strength and overall increase in the interest rate environment. But they are not following that much on everything that's happening. They are not following the movements in China. They are not following the movements in, let's say, Taiwan, South Korea, the larger blocks, or Brazil. So these are all independent, smaller markets. They have their own little world. Of course, when liquidity conditions are getting worse, they are affected by that. But now what's happening in these markets is that I think over the past few years, some of them were growing. Some of them were growing in a nice way by keeping the economic balances. Some of them were growing by, damaging the economic balances a little bit with current account deficits, currencies being under pressure but not moving. Over the past 2 years, we have seen some of these markets, the vulnerable ones, seeing lots of pressures and failing. This includes, for instance, Sri Lanka, which defaulted about a year ago. But some other markets have been recovering. Markets in the Middle East are doing well. Markets in Asia continue to grow by 5 to 7%. Eastern Europe had its own challenges last year, but now they are recovering. So you have a mixed bag of markets here, but that's the beauty of it. We can't talk about, big rally in these markets. We can't talk about big declines. They are following global markets. But then there is this added little spice coming from the, local companies, local dynamics angle, which is what is driving these markets very much independently from each other.
Very interesting to hear. And if we group the frontier and little small emerging markets together, as you said, there a question that we often get when we do look at these markets from clients is to do with liquidity. Can you expand a little bit with regards to liquidity profile and foreign investment in these markets?
So on average, you have naturally less liquidity compared to emerging markets, but you have also changing liquidity conditions. If you look at a market like, for instance, Egypt or Pakistan, these markets were significantly more liquid. Now they are a bit less liquid due to the macroeconomic situation. There is less investor interest, but you also have markets like Saudi Arabia going from being completely off radar screen of investors to being one of the important emerging markets. Then you have Vietnam going from having $50–60 million of daily liquidity to $1 billion of daily liquidity. We need to take this as, I don't know, threat and opportunity type of an equation. If liquidity is low, but we believe in these markets, then you have the upside for the next 5 to 10 years. Or if the liquidity is improving for the right reasons, then this is only supportive for the cases in these markets. But again, it's a mixed bag. If liquidity is so much lower than peers to an extent that markets become or companies become uninvestable, then there is no point in trying. But if the improvements that we are seeing in many of these markets, if this continues, then this is exactly why you are interested in these markets.
You mentioned something there that I want to touch up on, and just to follow up on that question, we saw a lot of IPOs last year in these markets. Can we expect this trend to continue? And is this something that maybe is a driving force to attract more investors?
No, this is a good example, right? Because you don't invest for today, you want to invest for tomorrow. Everything is, let's assume markets are efficient. There are inefficiencies in frontier and small emerging markets to start with, but then you have the path for improvement. Just have a look at the Middle East. This was where the action was. In Saudi Arabia, we have seen, since last year only, we have seen close to 50 IPOs. In the UAE, in Dubai, where I'm based, we have seen about 20 new IPOs. So many companies have been coming to the market. I think the activity will be very high in the Middle East, particularly in Saudi Arabia and the UAE going forward as well. There are many companies lined up for the offerings. Markets are becoming, broader and deeper from this perspective. So I think this time is a bit different, especially when it comes to the Middle East, with more companies coming, with markets growing, with investors paying more attention. But apart from that, markets, the growing markets, maybe they are a step behind the larger markets in the Middle East, but the growing markets in the likes of Vietnam, Egypt, or Eastern Europe, they are also coming with IPO. So I think the markets will continue to grow, not only from market cap perspective, but also from diversity and selection perspective as well.
You touched on some interesting countries there, and I'd like to just bring that up a little bit more and talk a little bit more about it. The Middle East and Saudi Arabia, being on the ground, I think in those markets is very important, right? And seeing as that you are on the ground so often, is there any reason to make these markets, is there anything that's really attracting them apart from oil?
Well, oil is important, right? If oil was $20 now, we wouldn't be talking about these markets, or we would be talking about these markets in a different way. Let's accept that. It works both ways. People ask us typically, okay, which are the exporters, which are the importers? But there's always a balance. Let's remember that always there are the exporters, there are the importers. That's the beauty of this universe. You can always find different types of opportunities at different oil prices. In the case of Saudi, I think there is life beyond oil. Saudi economy has been growing strongly, not only due to oil, but due to domestic consumption as well. I had difficult times when I went to Saudi the first time. I think this was about 10 years ago. It was a completely different place. I wish I took some more photos of that, or maybe more filming of the environment, but it was a completely different environment. I had difficult times expressing this to investors at times. But now it's becoming more obvious. There's big social reforms going on. There's big economic transformation going on. Saudis, again, most of these IPOs over the past few years were coming in the Saudi market. Then you have big investments You have big real estate investments. You have big projects such as NEOM project in the northern part of Saudi Arabia. And eventually, what Saudi Arabia is trying to do is they are trying to open. It might be low base, but let's face the reality. If you are on a low base, you will get a lot of criticism. But if the direction is positive, this is something to keep an eye on. But apart from that, on the energy side, for instance, oil is very important. But now Saudis are trying to diversify away from the oil. And the role model is Norway. They want to produce oil and they want to even increase production a little bit more, but they want to export oil while using more and more renewables for the home country. So in Norway, for instance, the country is exporting all oil, but relying on renewables 100%. And Saudis, for the next 8 to 10 years, they are willing to go about 50% renewables eventually, by exporting oil and afterwards relying even more on the renewables. So there are big changes taking place in Saudi Arabia.
Yeah, it's actually kind of perfect timing. We have a question here from the audience, and it's based obviously on what you were talking about there. But if you could elaborate, so the question is, what countries in the Gulf have come the furthest in the drive to diversify their economies away from an over-reliance on oil? I think this feeds in perfectly with the question you just answered. So please elaborate a little bit on that.
Yeah, I think Saudi is still a step ahead. In Kuwait, you have big reliance on oil still. UAE is also, there are big changes in the UAE. Maybe we talked about Saudi a little bit. Non-oil part is growing. But I've been here in Dubai for the past 7 years. And the pace of change is, maybe if I use the word unbelievable, it will be a bit of an overshoot. But there are big changes with visa regime. For instance, now there are long-term visas being issued. In the past, you would come to the UAE. If you don't have a job, you are out within a month. And you wouldn't have residence, you wouldn't have any long-term plans, so people would come and go. But over COVID, I think it became a place of attraction. Now there are these long-term visas. So now residents are here to stay for the longer term. Real estate prices have been going up, especially in the UAE, in Dubai, sorry. Then you have, with the support of the long-term visa, I was checking these numbers. When I came here 7 years ago, population was only 2 million. Now it's 3.6 million.
Wow.
So there are people, I mean, more and more people. I'm now becoming a resident a little bit, so I started to complain about traffic. That's a good sign. Maybe I'm becoming more established. But, it's becoming a different place. There are different job opportunities. Hedge funds are coming. I mean, we can follow maybe our industry a bit closer. Lots of activity on that. So the economy is being diversified away from, anyways, Dubai was not reliant on oil and gas. It's Abu Dhabi mostly. But even in the UAE, you see a lot of these positive developments. And let me remind you, there is a very strong intention with the legal status, with a lot of areas with reforms. And I mentioned close to 20 IPOs, and these are mostly state-owned IPOs. And transparency increases, ESG standards increase along with that. So there's very clear willingness, and there's a bit of a race between Saudi Arabia and the UAE. And this is a very good, healthy competition to, take a leap forward.
Very interesting to hear, and great to hear that you are becoming local and starting to complain about the traffic. If we shift a little bit away from looking at the market specifically, and we switch to looking at from a strategy perspective, right? At East Capital, we are index agnostic in our frontier market strategy, and we do often talk about how we take the extra mile to find good opportunities and find good companies, right? So what do you think are some of the key factors that make these markets attractive and that make them interesting, and that we find these companies that have an edge?
I think the biggest characteristic is that you have local structural growth dynamics. You might have China varies, you might have different dynamics, but in most of these markets, and again, let's not forget we are talking about 20 plus markets here. You might, and please, I encourage you to ask questions if you have any, of course, on markets like Pakistan, Sri Lanka. They are going through difficult times. Maybe Egypt is going through difficult time, but we are talking about a very large selection here. And the beauty is that, and again, maybe this is a small universe, but I wouldn't like to be an emerging market manager nowadays with lots of headwinds, and the wind is in China, and then if you invest in Brazil, you're affected from that wind. But what's particular about these markets is that these markets are very much domestically driven. There is very low correlations among the members, and people, the second I tell these low correlations, people will think about low liquidity. Yes, liquidity is lower than emerging markets, but let's try with a different angle. If all these frontier markets would have as high liquidity as emerging markets, think about it. Would the correlation between the members be higher or lower than, let's say, take emerging developed markets, you have France and Germany and the US, think about the correlation. Everything equal, liquidity conditions are the same. Then think about China, Korea, and Taiwan, maybe even Japan and India. Think about the correlations. You have structural correlations. And then in this universe, specific universe, think about the correlation between, let's say, Vietnam and Kuwait, or let's take Nigeria and Romania, take Slovenia and Georgia, or take Egypt and Pakistan. So even if the liquidity would have been much higher, and again, liquidity is something East Capital closely follows, correlations by structure are lower with at least as good expected returns. When I say at least as good as expected returns, this is driven by structural growth, GDP growth, 5 to 7% in Asia, maybe 3 to 4% in the Middle East with stable pegged currencies. Eastern Europe is a bit slower, but then you have pegged or euro currencies in reality. Africa, when it's coming back, it will be 5% plus growth. Then you get low correlations, lower standard deviation, 10 years out of 10 years, past 10 years, last decade, lower than emerging markets. 8 out of 10 years lower than developed markets even, then you have a very good expected return potential. Again, I'm not saying it will be good returns, but we can only make an analysis, look at the growth, look at the valuations, and conclude that expected return is at least as good, if not better, and with lower standard deviation. So it's a very unique asset class, typically overlooked. They had their times of pressure, but here for the long term. So we are just trying to find the best and most interesting cases.
Emre, last question here before we wrap up. You were at this conference then, and as you say, we tried to find these cases. Were there any companies that you met that really stood out, and any companies that you found more interesting maybe than others, and anything specific, any reason why?
Quite a few companies, actually. I can tell you the most impressive ones, maybe counterintuitive, talking about the Russian war, but we have some of the Eastern European companies doing really good in Slovenia and Georgia. 2 banks, both trading at 4.5 times PE. One is generating 10% ROE in euro terms, but next few years, like this year, it will be 12 to 14%. And in 3 years' time, they are probably going to be able to reach 17%, which is their target, paying 8% dividend yield in euro with today's earnings. The one in Georgia, 23, 24% ROE, paying 8% dividend yield as well. On top of that, you have high growth companies in Vietnam. Sanat was talking about that in Vietnam last week. FPT, IT company, growing by 20% a year, valued at 14 times earnings this year, 11.5 times earnings next year, still paying dividends around 3% with big growth prospects. Then if we jump back to the Middle East, you have a few companies growing 15, 20% in the consumer space. On the headline PE ratios, these are priced at close to 20 times, but growth is there. And then you have one education company in Kuwait, for instance, maybe less growth, but they are paying 10% dividend yield effectively in US dollar terms due to pegged currency. So you have actually quite a few interesting cases. If you have growth, you can find growth, you can get an exposure to growth. If you have value, then we are talking about 7, 8, 10% type of dividend yield. So we have different types of opportunities in different types of markets.
Emre, as always, very interesting to hear from you, and thank you very much for taking the time. I know you've had a busy week, and we look forward to hopefully speaking to you soon, and we'll see where we have you then, and hopefully in a new country. Thank you very much.
Hopefully we get a bit of follow-up questions. I told you before the call, if we can make it more interactive with videos. It wasn't possible this time around. Hopefully the next time we see the viewers as well, but please do ask any follow-up questions. I'm always more than happy. We are always more than happy to follow up on some of these topics. This is just the tip of the iceberg. Lots of issues to cover, but this was just a quick snapshot of what we are seeing on the ground.
Well, exactly as you said, and it's always great to get a little insight, and hopefully this will attract more people to have more questions. And we are always happy to set up calls with Emre and with anybody else here at East Capital Group. So please feel free to reach out to any of us here. Always more than happy to help. And until next time, thank you.